All right, everybody. Good afternoon, good morning, good evening. Back at it. Good old charts. Couple news items. Not too much. Just checking in on the prices, though. One small change with this chart. I've remember this is the monetary base. This is the global monetary base. Only going to find such detail here. Soon to be available for you for a small fee subscription. I added Switzerland, which I didn't have them. Should have had them on there because I had Switzerland's balance sheet, the Swiss National Bank right there, you see. It's actually a little bit smaller than the Bank of England, typically, but big enough that it should have had its own line item on this chart. It was in rest of world, so it shows you rest of world was, close to 4 trillion. Should have had Switzerland out of there, so. This is a power relationship, 80-20 Pareto. And as the crazy disinfo keeps to come out all the time, keeps coming out with the Epstein files or whatever, everybody's fighting for this. Good morning, Satoto. Good morning. Thanks for the repost. This is what everybody's fighting for. And as I showed you before, I can show it again, but China was actually at its strongest as a percentage, even all the way back here, when it was quite small. And as time went on, and especially the madness of COVID, China was actually at their weakest point right there as a percentage. And now it's back higher. But don't look at this too, again, don't look at this too complicated or, too one-sided. The only thing I'm concerned about is property rights and freedom. Nobody's going to give ground here. Good morning, Bitcoin Polska. Hope you're well. It was even a slight allusion, you can say, to Mark Rutte's speech to the Rada yesterday in Ukraine. So you guys know I'm not a huge fan of him, but at least he says the right things, trying to keep the Americans on side, but there's just so much more we could do. So this is the layout. Again, I'll show you one more. I need to show you guys the percentage. Okay, so keep in mind how small the monetary base was here before the global financial crisis. All right, $5 trillion. Went up to 31, nearly 32 in peak COVID times. Now it's down to 27. And if you look at that here, again, with a relatively small global value, China was at their strongest actually here. Actually here. I wish I could help you, man. This might be the wrong channel for you. Does Murad show that anymore? I haven't heard from Murad in a while. He's been shilling the shit coins. Whatever you can do to get some extra sats. I'm not going to criticize it, but it's risky. So China at 20% now, all the way down to 15%. Getting stronger again. Our currency is getting weaker. Theirs is, you could say, relatively speaking, staying the same. And if I had to look at, again, relative strength, relative power of countries, we can look at GDP, we can look at even military spending, but this is their fiat shitcoin index right here. We'll come back to it. See where we are with the silver. A little bit higher, in fact, from yesterday. But it's got to close here. 119 to be a record. A little stabilization for both. Gold's at it. But it didn't actually hit the record, did it? 4,887 it needed. It only had 4,861. How's he doing? I know I'm sure he's grooming the followers much more than I do. All right, I want to show you an interesting one. We talked about silver. Is this the bottom? I don't know. Is this a temporary retracement? I don't know. But I feel like the end is nigh for silver. I mean, I'm not sure if this is going to be the bottom. Again, relative to the power trend, I'm not sure. But even if it's not the bottom, that is the cheapest Bitcoin has ever been in a long time relative to silver, I feel like it's close. Now let's look at gold, and then I'll show you the old, say we revert to the mean with gold. And what could that be? Okay, so gold is still hanging around the 15, 16, 17 ounces per Bitcoin, but getting cheaper. Bitcoin's weakness here is more Bitcoin's weakness than gold's strength. These are very, very important governors, I think, for Bitcoin. How cheap we're going to give Bitcoin to gold bugs, to silver bugs. Those are very, very important indicators that we've really never tested before. At a sort of at scale. But let's say we go back. Let's say we get back to the mean. This is a little bit harder to understand. So here's the dollar price in black. You can understand that there. This is the same Bitcoin gold chart. All right, but then let's say we go back in the future to $5,000 gold. Just five, I have to keep it at one number. But, where's our gold? Gold price is 5,000. The trend itself is 2,000. Who knows? But even if we stay at $5,000 gold and then Bitcoin gets back to trend, this is what the price would be for Bitcoin. Actually, I need to take off all the bands. Where's that other one? All right. So what I'll show you, it's kind of a fun one. All right, the trend is 65 ounces of gold per Bitcoin. We're only at 15, 16, 17. All right, at this dollar price, which is even lower now. If we get back to trend at $5,000 gold, that's $300,000 Bitcoin. Of course, this is not happening overnight. It's a question of probabilities. But, if you start to draw bands around it, to be clear, I think this is going to take a long time to get back to trend. But I'm pretty comfortable with these trends compared to, where the price has been. Well, let's look at this one. Where the price has been in gold terms over the last few years. Just, having that weakness where we are today. Hi, Logi. Thanks. So, it's not going to happen overnight. At least I don't think it's going to happen overnight. But what I'm showing you here is, right? Look at the actual price, right here in dollar terms. Then look at the gold price in gold ounce terms. What I'm showing is, all right, fine. Let's say we stick at $5,000, but we still get back to the trend. It's a big price in dollar terms, right? It's saying forget the dollar trend. We just get back to the Bitcoin gold trend, which is 65 ounces. Of course, Peter Schiff says we're not staying at 5,000. We're going to 10 or 20 or whatever he says. Latest. But if I had to put my faith in something, I'm putting it in the power trend, not the gold and silver exponential bull runs, of which there have only been, 3 in the last 55 years. And this is the third. Not counting this little early 70s bump. I don't deny, and I'm not unhappy for gold bugs, that we could even go higher. We could go. Oh, sorry, this is silver. Doesn't matter. It's the same for both, right? Here's gold. I don't deny we can go higher. But you got to back up and look at this trend and see if it's such an unreasonable expectation of supply and demand, or if gold has just been suppressed by Jeffrey Epstein for 35 years. 30 years, I guess, would have caught his transgressions. Yeah, a magnet is a good word. Look at the trend. It's a 95% R squared. This is the gold trend, not the price. I'm just showing you the price in dollars for reference. But the gold trend is 95% R squared. Even if we stay at a very nice for gold bugs and $5,000 an ounce, which I had it at 4,000 before, which would give you even higher numbers. So, or no, it would give you lower numbers, wouldn't it? Yeah, it'd give you lower numbers. If gold goes up and Bitcoin goes up back to trend, we all benefit. So, $5,000 gold ounce. Maybe it doesn't happen even here. Maybe it only happens by, say, the end of the year. All right, there's your range. I think we can all be pretty comfortable with these numbers. Morning, Kurt. Kurt, you in the U.S., man? You are up early. Possible. Yeah. More analysis I need to do. I mean, I don't know. I see the same. Like, if I just look at this before, say, here, you wouldn't be able to, if you didn't see numbers, you would just think that's the dollar chart. So I would still say Bitcoin is more or is less correlated to all assets uh, before, say, this current cycle. It's just different. It's just a different asset. It worked differently. The bubbles were different. The busts. I have another one for you. We can explore. So here's the stock market. Kind of similar to gold. Stocks outperformed. Of course, AI stocks make up, like, what's the number? I don't know. 80% of the S&P now is the market cap of those magnificent seven plus, a couple others. So we're now at 10 shares of the S&P per Bitcoin. Trend is 27. So similar deal. We're 70, 80% down from trend. Hello, Jukebox. Yeah, true. Um, this is, you're right. There's too many numbers to play with different gold ounces here, but yeah, basically, if gold stays higher and we rebound, we get nice numbers. If it goes back to 2000, then we get lower numbers, which I think is more likely, frankly. Doesn't that seem more likely? Like, maybe we go back to 2500. I'll just do that. I think I can copy it quickly. We can just compare. It's going to take time. Got it. Good morning. It's even harder, man. 8 hours from the Baltics. There you go. Yeah, I tend to agree here too. And it's not even the adoption phase. It's well, I mean, it is the adoption phase too, but it's so much stronger for Bitcoin. But it's just the life cycle of coming to a profit in gold. If you really want to get in the gold mining business, it's longer. It's much longer than Bitcoin. Bitcoin's maybe too short, as we know, can make a lot of people bankrupt quickly. $3,000 gold? I would say that's even too high, but I'll do it. Yeah, I'm copying it right now. Hold on. Take me a second. Do 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 do. Okay, let's see if this works well. Pulling it up. Morning, Felix. Nothing unusual, man. Looking at the gold, if depending on what gold, presuming gold kind of stays at a higher level, but then Bitcoin gets back to its Bitcoin gold trend line, which is like 65 ounces. What's that US dollar price mean for Bitcoin? So we're looking, this is $5,000 gold. And now I'll show you guys $3,000 gold. Right here. All right. So same deal as point, it's not going to be immediate, but basically this Bitcoin price in dollars. So gold ounces down on the bottom, dollars at the top. But the governor here is $3,000 an ounce and that 65 ounce trend line, which we're at right now. We go back to that trend line at $3,000 gold, there are your prices. And let's take it out to the end of the year, assuming it takes some time to. So $85,000 Bitcoin on the low end versus 142,000 on the low end. But on the trend, it's 250K versus 431K. I wasn't even paying attention to the trend. 430K. I think we could all get behind these numbers. But doesn't that seem more likely that it's even going to be a lower price than this? I mean, gold just doesn't pump like Bitcoin. It's a different asset. These miners are going to go bankrupt. Nobody's going to want to pay that price for jewelry. Oh, that's silver. Sorry, I keep going back to silver. Same phenomenon. It is true though. So you can see how silver is violently up, violently down. Gold is a little bit more, kind of like Bitcoin at the edges. It's more gradual. But I think it's totally realistic to assume that we could get back to, what's the 8? At 2,500, call it 3,000. So this, to me, actually seems like the most realistic analysis is, okay, we don't get to $5,000 gold and match it, but Bitcoin could get back to that same Bitcoin gold trend, $3,000 gold. That means, that means $250,000 Bitcoin. Everybody following that? The key is getting back to this black line, which, like many assets, Bitcoin's been trailing a lot in the last couple of years. all the poly market bettors are going to realize they just need to take some gains and put it into Bitcoin. Yeah, I got you. But it's happened 4 times before, right? There's a new crop of Bitcoiners every 4 years. Whereas gold bugs, a new crop of. I really believe it. You think it's not going back to the trend ever? The power trend? Not even in dollars? Where's dollars? Did I even put it up? We've been looking at stocks, bonds, gold. Not even if I show you this chart of world-based money, which is about to pump. It's already been pumping. Again, not always perfectly aligned. Bitcoin's been going up as it's been sideways. Couple fun things or interesting things to watch. You guys know I like to do the politics as well. Staying sane. This guy's very interesting, Glenn Carl. All right. He's a 20-year field officer, also served as Deputy National Intelligence Officer for transnational threats from the National Intelligence Council. He's been on Silicon Curtain, really good Ukrainian podcast, many times. This was a summary of maybe 3 or even 4 interviews that was released in December. And I had listened to the original one, and then this reminded me. So this is the guy. You guys know I like to tell you my sources. This is the guy that said in 1991, the Russians had more assets in the United States than the Americans had in the world. And he said that trend hasn't changed. So when you see, not this one, but good memes like this, and this, this is an old one just to show you. This guy also talks about this guy Surkov. He's intelligence officer that pushes a lot of the Russian agitprop. They're not going to stop. This was quite a. I saw this. I forgot to talk about it. This was quite a turnaround, though. Many Ukrainians and the Polish foreign minister was complaining that, look, I mean, if you're saying you're going to be on the right side here, Russians are using Starlink terminals clearly, even on their drones. And Starlink responded promptly and even said, okay, if we detect that a Starlink system is moving more than something like 75 kilometers an hour, we'll shut it off. And so the Ukrainians started to notice and said thanks, and they thanked Musk. And this is just something that has never happened in 4 years, is he's actually trying to be helpful to the Ukrainians and saying, someone else said thank you from the National Defense Forces, and he even responded with "You're welcome." He's been beat up enough on the Epstein files. I don't know. Maybe he's calmed down on the ketamine and just tried to find good causes to actually work for again. It's nice to see a turnaround here. How long it will last, I have no idea. But It's going to come back to this, guys. Bitcoin's going to accrete here, no doubt. But nobody's giving up an inch. They're going to print. They're going to finance deficits. They're going to do what they need to do. Yeah, I agree with you. Just stick with the power curve, right? It's a good question. You know, I forget. What are we at? 19? Wait, did we even hit 20? Can't even remember these things anymore. I'll show you my simple. No, 19.9 still. I thought it was 19.9. 20 would have been much bigger news. We can find it here. So quite a low market cap compared to the $2 trillion plus we had. Silver, killing it. Gold, killing it. This is basically what I have here, but just showing you the top 10 assets. Top 10 base money assets, and then gold, silver, Bitcoin. So this is really the main, the main group. Here you see India at 500 billion. So India is by far. India can swing it either way when it comes to politics, let's say, but India is by far the largest in this group. So 3.3 trillion, rest of world, India's half a trillion. But this is how it looks. So 19.89. Yeah, someone said he posted hundreds of times over the weekend on it. So I don't know. It's a victory for Ukraine, at least if he's gonna finally not do ketamine and just try to take Russian lithium or whatever he wants from doing deals with Russia. It's a win. I think that was really it, just for the politics. I mean, Ukrainians are fucking heroes, man. Freezing there. You could, again, just a theory, but another theory, of course. We have the S&P, we have gold, silver, climbing to new highs, exponential assets. These are usually not sustainable over the long term at a higher trend. They can get higher and faster, but it takes a long time. And since Bitcoin has been so weak, precisely during the AI boom, the gold silver boom, which is also reflected in the stock market, wouldn't it be an interesting validation if those things had like a major correction, crash, whatever you want to call it, in the next year, and then we finally get back to the power trend? Because gold, silver are pretty extreme. Dollar is still, whoops. God bless it. Did I not even put it up? Bring the dollar chart for you. Probably, yeah. Bitcoin Treasury is a good site. You can see. Oh, I wanted to show you guys the flows. Let's see if we have a good flow data for yesterday. I don't have it ready. Outflows. So the day before was, wait, what the hell is this? XRP? No, BTC. It was 500 million. I think it was 500. Yeah, 500 million of inflows the day before. This is some XRP shill account, but more outflows. They do, but I would say they shift more than, okay, so this didn't exist all the time, but these did. Do you think we're going into a 20-year bear for Bitcoin like we did for gold and silver? I would think be less likely. Let's see the old central bank balance sheet of America. So when I tell you, again, this is a very, very slowly updating exhibit, still only from September, but when I tell you it's increasing, we can look at the weekly. Ah, shit. This is still monthly, but whatever, it's fine. January was slight decline, but up from November, barely. We know that they're going to pump. In any event, if you look at this, where most economists were learning, Peter Schiff included, right? Look at that. 100% R squared. This is what ruined economics for everybody. They thought all you got to do is increase the Fed's balance sheet 6.7% per year, and Bob is your uncle, as the Brits say, but nope. To be clear, I think if they did let the economy wipe out in 2008, it would have been better. They could have been back on this better trend line, but I don't think there's any chance they get down to that now. So that's the trend line that we're on right now. And I think it goes faster. 8.8% per year is current. And as I showed you guys, this trend is actually closer, interestingly, which includes World War I pump and World War II pump. It's actually closer than this one. So these are fairly close, which is interesting. I'm not saying it's a scientific fact that the Fed needs to gravitate around this black line, but it's surprising that this seems artificially actually even low. But again, I wouldn't say that they needed to do all the bailouts in 2008 by any stretch of the imagination. But they're going to print. We know they're going to print. Another thing about the percentages here. So as China had such a strong balance sheet relative to the world, right? The Chinese central bank in 2008, again, a much smaller monetary base. We were only $5 trillion worldwide in central bank money. But what is also interesting, again, when when they lost share here, once they let that virus go, notice how it's not only America that's accreting. Again, I know that they printed money. I know printing money is bad. I'm not saying that. I'm just saying, Switzerland, if you put that there now, a much bigger share here at 2.6% than it did here at 0.7%. So it's not just the dollar that might get better when another currency gets weaker. And when I say get better, I mean hold its value. Yeah, I haven't completed it. So M3, I'll do M3 honestly before any of the others. And M3 is the correct analysis. Federal Reserve hasn't published M3 in 20 years. Literally, February 2006. They stopped publishing it. So, damn, where is? So here's actual M3 versus Bitcoin, which is kind of interesting. US M3, not worldwide M3. Has the same pattern, by the way, as the dollar, which again shows me Bitcoin is, people just don't know what they own here. So the Federal Reserve stopped publishing M3 in February 2006. It had two components, actually three, which they were losing track of. Now let's say two. One was repurchase agreements, which are when you trade treasuries around basically like cash. And who's ever levering that up pays a higher interest rate than you would get from the treasury. And the other is Eurodollars. And I actually don't have Eurodollars here because it's very difficult to get anymore. But the Fed, they said as much when they stopped publishing, even though they said oh, no economic material data exists. And so their M3 at the time was even lower than this. It was like 10 billion, 10 trillion, 10 trillion. Anyway, now you see this. So this is my backwards compatible. It's over 37 trillion now. But notice this bump that went down. This was all mortgage-backed securities, derivatives, a lot of things that were put behind these money supplies that people didn't understand. So that deflated after the GFC. And I'll show you the breakdown in a second. But anyway, if we just look at Bitcoin versus M3, all right, so small. US M3, not global M3, US M3. But same phenomenon as all the other power curves. Underperforming. Trend says 9%, we're at 6%. Yeah, I should. What interview are you talking about? I'll watch it. Yeah, I see that. I showed you guys that, right? Let me see. This would be cool to show you. Let's see if I can do it. So again, I'm still tweaking out this database, but it's going to be good. You guys will have access to it, but I'm trying to make all the concepts work. Let's see if I do. I need to do that in Yuan. Hold on. Thanks, Logi. Hold on. Sorry for the dead time. I'm going to give you something where you can see China here as a component of base money priced in yuan, which I've never shown before, which should be cool for all of us to see. If I can make it work. Up, right, or left. No. All right, hold on, hold on. I think this is going to work. Right. Yeah, that's going to work. Sorry for the dead time. This will be a good one. Updating it on the fly. One second. Kurt, what was that? Where were you watching him, by the way, on this? I need to watch this. This will be a unique look. I haven't even looked at this myself. All right. Save. Hold on. This will be worth it. Huh. All right. All right. All right. See this chart? I'm going to show you the same chart. Zoom in. And zoom in. I'll show you the same chart, but everything priced in Chinese yuan. It's kind of interesting, huh? Should be correct. First of all, interesting how there's no big drop in dollar terms. Sort of stays the same in yuan terms. And yes, constant, steady churn. And this is also further evidence of why this is rising, right? In dollar terms, this percentage is rising for China because their currency relative to, if you price it in dollars, it's falling. If you price it in yuan, it's staying the same. And this is actually China's balance sheet now, so this is not the Fed anymore. This is the PBOC. Same Bitcoin price, but priced in yuan just for the fun of it. I need to have a power curve to make more sense of it. This is going to make more sense for Chinese viewers, but yeah, so anyway, it is true, and I've showed the ounces, right? It's going up, but this their yuan is clearly growing. if you look at their yuan in dollar terms, I could update this, which I will. Let's see if this works. Why does it switch orders? Apply. All right. So yeah, the yuan has been holding purchasing power. So there's the dollar terms. Now this is same chart in dollar terms, but the yuan, the PBOK in dollar terms. So you see the, whoops, that's not the one I want to show you. I want to show you full. Be this one be better. Where's the other one? There it is. Dollars. This isn't updating the chart, but anyway, it's yeah, it's in dollars. That's fine. Chinese balance sheet in dollars, monetary base in dollars. There's with the Fed, and then this is in yuan. Which is wild. So M1 is just the physical cash you and I can hold. It's not all the cash because some cash is in the bank. It's just called vault cash. But it's basically all the cash central bank prints minus vault cash. That's called M0. So M1 is M0 plus demand deposits. That's M1. M2 is M1 plus what you would call less regulated retail deposits. So retail money market funds, time deposits for retail, savings deposits, and that should be it. And then M3 is M2 plus less regulated institutional money or deposits, like repurchase agreements, money market funds, time deposits for institutions, and then euro dollars. And euro dollars is a big X factor that I have not been able to recalculate yet. But just to show you the layers of those things, I've shown this before. It's here. All right, so here's the full money supply. So you can see that cash outside banks there, 0, M0. Number 1 is M1. Actually, number 1 is demand deposits. I'm not delineating. I'm just showing all the components. And savings deposits, which start in M2. Retail time deposits, retail money market funds, all M2. So the problem with M2 is like it's only you're still missing 15 trillion in money at least. So this is M2, would not include these things. So it's for the reason why I don't think it's the best money supply to look at because it's not the whole money supply. And I certainly don't think you'll be able to predict anything about where Bitcoin goes with this. These are negative, by the way, because these are for banks. We can't touch these. So this is what is typically called the money supply. This is M3. All right, which is that 37 trillion. Hold on, I'll show you. I might have just closed it. There's the M3 without all the colors. All right, so Bitcoin's still only 6% of it. What I was saying before, I've said this before, but just for people to understand, it was not demand deposits that caused the global financial crisis. It was this money. All right. Repurchase agreements exploded. And again, the Federal Reserve stopped publishing M3 right there, literally 20 years ago. 20 years ago this month. So we went from 3 trillion in repurchase agreements to 4 trillion, 4.3. Institutional money went up, doubled. Institutional time deposits doubled. And then Eurodollars, which aren't even included here, very hard to calculate, went up. So notice the rapid growth of this. Notice the rapid growth of this. I'm not saying there's a crisis tomorrow, but this is what would make me think at the end of the day, all of this stuff will come back to the mean. All right. The stock market, Bitcoin related to the stock market, Bitcoin related to gold, Bitcoin related to silver. And then the Fed did a lot of intervention here because they wanted to not explode this money supply. So they became the counterparty in repos, which is, it's a rehypothecation of treasuries. So the Federal Reserve itself holds treasuries on its balance sheet, would receive interest rate from the treasury. The Fed said, hey, money market funds will be your counterparty for stuff you want to do, like go long, go short, do other crazy things in the market. We'll pay you a higher interest rate than you would get from the treasuries, so we can be your counterparty for your NAV balance of your money market fund. And so that's what this is. The Federal Reserve is intervening in the market. And they knew it was a bad idea, so they had to get out of it as quick as they could. But once they get out of it, you see the actual money in the market is exploding higher, which is, by the way, quite similar to another period in our history. And then one final thing, the old sacred demand deposits, which are Austrian friends, which I consider myself Austrian leaning. There was no major increase in demand deposits prior to the global financial crisis. Had nothing to do with it. So anyway, hope that answers some of the questions. Buenos dias, El Porky. I like that name. The Federal Reserve is just so ridiculous. I mean, they could publish all this much nicer. They could give us repurchase agreements, or no, sorry, not repurchase agreements, but Eurodollars. I'm sure they have some handle on it, but they don't want to. So this is kind of interesting, I would say. This is the first time I looked at the yuan, both in dollar terms. So here's the Chinese central bank in dollar terms holding its value, and then in yuan terms, everything has actually been kind of losing value, i.e., looking better for the Chinese. Or maybe I said that wrong. I said that wrong. Of the countries that are losing value, the yuan is not one. So you can see in dollar terms, this is going down because some countries are printing less. It's true. But also, this lower value means countries are losing value against the dollar. So in yuan terms, the loss is actually not that much. That's what it means globally. But yeah, they got, before the global financial crisis, they had 45 trillion yuan monetary base. Now they have 187 trillion yuan, and that's the money that they buy gold with. So I'll check out the interview, Kurt. If you, I'm sure it's just the latest one. I'm sure I can find it on YouTube or whatever. But if you know, send it over. But anyway, yeah, I want to give you guys more of this information where we can look at things in different currencies. That's what I'm going for here. It's hard to avoid politics sometimes, right? I mean, China looked pretty strong, but then Xi just purged a few of his top generals. That's quite a weak act. It certainly was. Everything changed in 2008. And Bernanke is trying to get away with printing over the problem. But they just give us more inflation. I think I'm going to do it for today, guys. But I would say let's end it on this one. If gold stays at 5,000 bucks an ounce, Bitcoin returns to the trend, which I think it could by next year. $400,000 Bitcoin. If it's only $3,000 an ounce and Bitcoin returns to the Bitcoin gold trend by next year, $250,000 to $60,000 Bitcoin. So if you believe in the power curve, you believe that gold and silver will hold some of this value, that it's, perhaps rightly reclaimed, some of it. I still think we're going back to a good trend for Bitcoin. Give me 2 months. I'm working on all of it together. I mean, right now. So 2 months. In the meantime, you can still see, some of the basic data here. Updated on the gold, silver, Bitcoin, stock markets. Thank you, guys. Enjoy the day. Hodl by the dip, whatever you need to do. NFA, not financial advice, but thanks for sharing the time with me. Appreciate it. Stay bullish. See you guys.